Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas. And I will also be going over ticker symbol BOIL, which is 2x leveraged natural gas, as well as ticker symbol UNG, which is United States natural gas. And so, I wanted to follow up on last week's video because I did point out a number of bullish signs, including bullish divergence that you can see highlighted here down below in the RSI. And it does look like that played out. It does look like we got a rally. However, it was not as big of a rally as I would hope. We did not even get to the 236 level from this Fibonacci retracement, but we did make our way up, going up over the course of the week about, let's see, about 16%, so not that bad. However, we topped and we did pull back. And so I just kind of wanted to go over where I see price going over the next week, if we will find a bottom higher than the previous low, or if we will continue down. And so in order to do that, I'm just going to zoom in here on the current price action, having done this finer tuned Fibonacci retracement from the low that was hit on Monday, February 19th, going up to the high that was hit on Wednesday, February 21st. And so I do want to point out that the last video that I did came out following the trading day of Friday, February 16th. And so at that time, the low was actually hit the previous day on the 15th, and that was at a price of $1.61.4. The new low, which was hit on Monday, the 19th, is at $1.60.4. So just 1 penny lower than what I had done last week. So I had adjusted this retracement on the way down to that level that you can see here. And so if you wanted to look at some of those levels, you just have to adjust that by a penny, and then you'd get them. But I'm not going to do that here. I'm just going to focus on this most recent run-up that we've seen, looking at the levels relative to that. And so really what stands out to me is that on Friday, we did break below the 618 level of support. I was hoping would act as support, and that was at a price of $1.70.33. So unfortunately, closing below that on Friday at a price of $1.68. As you can see here at the bottom of that candle, I do suspect because we closed at the bottom of that candle, we will likely continue lower into this week. Hopefully, we can find support at the 786 at a price of $1.65.97 or, $1.66. Hopefully, we don't see any closes below that level. But if we do, I do think we could be heading to new lows in this cycle. So do keep an eye out for that right around $1.60. Hopefully, we don't start making new lows here. Hopefully, we do find support at the 786. But, for me, at least as far as what I'm doing, I'm, putting on the brakes. I'm hoping that we find support here. But if not, I am bracing for further downside. Don't want to be loading the boat just yet. Pacing myself to see where price action takes us. And again, hopefully we don't see any closes over the next week below $1.66. But if we do get some wicks below, that could potentially be a good buying opportunity. So that's what I'm hoping. But yeah, as far as what I'm hoping, what I'm doing, I'm going to switch over to UNG. This is the one that I am holding. And yeah, I did take the opportunity on Tuesday of last week, on February 20th, to double my position, hoping for a rally. Did get a nice rally, but then, got this pullback. And just like with natural gas, UNG did break below the 618, which is at a price of $15.37, closing the week at a price of $15.21. So being just below that. And the next level to the downside that I could see us finding support at is the 786, and that is at a price of $15.02, or right around $15. So I will be looking for that to act as support over the course of the next week. If that doesn't happen, either because we bounce and we get a close on Monday above the 618, or, above the low that was hit on Friday, which was $15.11. If we get a close lower than that, that would suggest continuation downside. If we get a close above that, that could suggest that this break of the 618 is a fake out, and we will be finding support there before continuing higher, potentially to test these levels above the recent high that was hit on Wednesday, February 21st of $16.69. So hopefully, we either respect 1502 or respect closes above 1511 and start to make our way higher. By the time I put out next week's video, hopefully we're at a close above 1669. That would suggest that we have broken this downtrend and that there is upside to be had the following week, but we do have to see us first reclaiming that support. And if we can't hold 1502, I do think that we will be revisiting the lows of 1456. So I at least am bracing for that. If we can't hold 1502 or $15, I do think that, we will be hitting new lows. And so I want to be ready for that. So I'm not loading the boat. Again, I'm glad I did here. But if we do hit newer lows, I want to be able to load more. And I don't want to get ahead of myself thinking that 1502 is going to hold. I need to first see that confirmation. And then so with Boyle, this being the 2x leverage, a little bit more risky of a play. So this one, we did also get a bounce, did also break below the 618. So it's actually pretty interesting that all of these are behaving very similarly. That wasn't the case in the most recent drawdown or the previous run up. But anyways, closing on Friday at a price of $14.73, being just below the 618 at a price of $14.90 would be great to reclaim that level, and especially closing above the low from Friday, which was $14.61. So do keep an eye on that. If we do continue lower, the 786 is at a price of $14.26. Also does happen to kind of coincide with the high that was hit on February 15th, which was $14.26, exactly at that level. So I think that's pretty interesting. But if we can't hold that, I do think that we will be revisiting the lows of $13.45. So while I have gotten rid of my position of Boyle, I was able to sell, taking a very small amount of profit after this run up. I don't plan on buying back in. Maybe I would establish a very small position if we revisited 1345, but only if we get confirmation that we're going to start to turn around, if we start to see some bullish signs like I saw last week. Those have unfortunately kind of faded, and so we do first need to establish support before we can continue higher. And before I close the video, I do just want to put up the weekly charts here, and so we can see that while things don't look that great for Boyle, having come down a bunch, it does look like over the course of the past week we did put in this inverted hammer candle, which is bullish, could suggest a reversal following this downtrend. However, I do want to note we did see an inverted hammer candle here, and we only saw a continuation to the downside. So do be cautious of that. But the big difference between this inverted hammer candle and this one is that we got a close higher than the previous week's close. So I do think that is really good, whereas here we got this inverted hammer candle, but our close was lower than the previous week's close. So I do think that we are still seeing bottoming signals. And if I do flip over to UNG, same exact thing. Inverted hammer candle closing above the previous week's close, which we did not see in late January. So, I am still hopeful that we will be seeing a bounce in natural gas. I do think that this retracement that we've seen is near completion, but I want to brace for the possibility of hitting the 786 or doing a full retracement to the lows here at right around $1.60. So I'm just bracing for that, trying to be cautious in the week ahead, waiting for confirmation before adding and really trying to get that average down to take advantage of the next levels higher. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this and weekly coverage of natural gas. Thanks a lot for watching.